Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
So first of all, happy Memorial Day.
Happy Memorial Day.
It's a Memorial Day weekend. And so we're going to do an update to the real estate market because we just got all the data for last week. Juana's voice is still a bit hoarse. A little.
You want me to neigh?
Nay. It's she's not doing Candace Bergen impression.
No.
It is. She's been yelling at me all weekend, so her voice is a bit wrecked. She couldn't even talk at one point yesterday, so she just pointed at stuff and made grunting noises. And that's how I knew it. Make her food or something like that. Anyway, okay, Juana. So today we're gonna have fun because we're gonna do Las Vegas house update, Las Vegas condo update. And then we're going to wrap it all up with predictions.
Oh, my goodness.
We have a magical, mystical device to predict.
Okay.
It's here, never been seen before in a video.
Is it sponsored by Witch's Cauldron Local 777?
Witch's Cauldron IPA. They're a local, they make a beer locally, a bunch of witches. It's pretty good. Okay, so here we go. Market action. Index for Las Vegas, you can see 45. It's basically, that's what it was last week. That nothing fantastic there. The little quote at the bottom, though, the market continues to get hotter. More sales demand and fewer homes listed have contributed to a relatively long run of increasing prices. Current supply and demand levels show no signs of prices changing from their current trend.
Okay.
And the trend right now is kind of an upward trend.
It's up. So, look. We've kind of said this supply and demand, that kind of controls so much of the market. So long as we have diminished supply, increased demand, or at least sustained demand, prices will remain stable or increase slightly.
Yeah. All markets are affected by supply. Those are literally the two forces that affect marketplaces, supply and demand. Okay. Now we're looking at the real-time micro profile. Median list price, $558. This was just for the last week. You could see in February it was $49.9. So that's a pretty substantial increase there, $70,000.
Not bad.
Just since February. Median price of new listings kind of bouncing around there. Big one here is you can see price per square foot. You can see the trend. It's just going up. Not dramatically, but price per square foot is increased. And then as we go down here, let's look at inventory because I've got a chart on this. It's pretty cool. Okay. In February, we had 3,500. Now, remember, in the fall, we had like 5,000 or 6,000 just in Las Vegas homes on the market, which was still an average market. But all of a sudden, we're down to 23, 28.
So that's not a lot of houses on the market. We do have buyers looking. They're just not finding what they're looking for. I know this is really boring, but this is kind of what we promised you for this year. This a year of no drama in housing, and that's kind of what we're getting.
Here's the price per square foot for houses. As you can see that it backed off a little bit, adjusted, and it's going back up there if you look all the way to the right. That little round dot is the 7-day average. It just shows the trend. The trend is home prices too that have been going up. We tend to see this, as you can see every fall, it tends to level off or drop a little bit. We'll see what it does this year. Here's a big one, though. Median days on the market. Now, remember, the stashed line, the 7-day average, is the leading indicator because this tells us what's happening right now versus the last 90 days. And it's been dropping, but this thing shows it absolutely tanking. The days on market is really coming down. This is a surprise to a lot of people.
Right.
Because this is even less than a normal market days on right now, the 7-day averages.
It is. And all of these numbers, while they're not, that there really isn't really any change from last week, I think what's interesting about them is that we were expecting them to flatten out. We were expecting things to start dipping because we're going into June. The spring selling season is basically over. But this is not what it looks like.
Right. The other thing to notice on this chart is the last 6 times at this exact date is where the dots and the little diamonds are. Nowhere in there was the median days on market this far below. In fact, in most of them, it was the same or above. So it's substantially changing Homes are selling much quicker, median homes. And then part of this too is homes that were on the market a long time that just never sold. People just took them off. So it's two reasons why a home would leave inventory. What are the two reasons?
The home sells, or the home is no longer for sale.
Okay. Here's inventory. Now, as you can see, this goes back 6 years, basically 5 years. But there's, if you look at the little, the leading indicator, the 7-day average, you can see that it's below, which means the trend is inventory to keep decreasing. But if you go back and look at every year, inventory was already starting to decrease. So you can look at the little dark line, you can look at the little dashed line. In every single case, inventory was increasing, but it's still dropping this time of year. So year over year, its inventory is declining, whereas like especially last year where it started increasing, which is when everyone said housing crash, right? Didn't happen.
So to me, what it looks like is that the spring selling season, because we haven't had a whole lot of inventory, because we've had fewer transactions due to the lack of inventory, maybe we're going to have a protracted spring selling season. So maybe we're going to go through June.
Yeah, I think so. And it'll be interesting to see what happens in the fall. Because remember that all this is happening with interest rates in the 6%, which is historically not. It's average to low historically, but just for the last 3 years, it's a bit higher.
Correct.
Right. Okay. Now, that was housing.
Okay.
Now condos. So the market action is for condos is 48. It's a bit hotter. There is the definition at the bottom. It says home sales continue to outstrip supply, and the market action has been moving higher for several weeks. This is a seller's market, so watch for upward pricing pressure in the near future if the trend continues. We're going to jump over to this market, real-time market profile here, and pretty much everything in this is showing how that the condo market is just getting hotter, even as the spring normally it sort of ends. Median list price is up, median price new listings is up. Price square foot's about the same. Average days on the market is up a little, but median days on the market is down. And remember, average days on the market's including condos that have been sitting on the market a long time and not selling. Price decreased. Only 25% of all listings had a price decrease. That's really low, even historically.
Right.
Right?
Yeah, because a lot of listings come on the market with optimistic pricing, and then they get realistic.
And then the other thing is inventory, 726.
Not a whole
That's
lot.
for all of Las Vegas.
Yeah.
That's condos, not Las Vegas. And there's probably, 50,000 condos in Las Vegas or something? Okay. So we'll start with this one, Market Action Index. This is the long-tailed chart that shows you. If you go back, you can see it's normally 40. It did get hot during the last 2 years, but you can see the 7-day average is 58. That's the highest it's been since last spring.
Yeah, that's definitely eye-popping.
Eye-popping. Okay, here's median list price. As you can see, if you looked at this, it doesn't look like anything. This is kind of what normally happens. Prices go up and they fall off a little bit in the fall, then they go up and they fall off a little bit. If you look at that, it pretty much is what's happened here. Prices went up, they fell off a little bit. But median list prices, and then if you go all the way to the right, you can see that the median list price trend is higher than the 90-day average. So there's not a lot of weakness in the condo market.
Nope, there's a lot of support there, particularly with the low inventory. I mean, you're not going to need to take a haircut when there isn't a whole lot of inventory out there.
You know what's funny on this chart? Oh, I'm sorry.
So I was going to say, if you want to buy a condo, you need to just pay what they're asking, because there's not a whole lot of choice.
You know, it's funny. I did a search for fourplexes because someone it said something about buying a fourplex, and I just went and looked. There's literally there's no fourplexes, and any fourplexes are insanely expensive.
They are, and I've never, not never is a long time, but certainly in recent history, I have not seen them make sense.
We could have gotten them for like $60,000. Remember that back in the day, the really kind of older ones, not in very good shape. But what's interesting about this median list price chart is if you go back to January, which is just where it says December 2021, just go a little bit to the right of that. You can see that the list prices, remember interest rates were 3% then, and they're 6.5% now. but prices are way up. This is not, if you had asked somebody to look at this chart and say, what do you think interest rates are doing? They would say, I don't know, they're probably not doing anything because it doesn't look like the market's being affected by much here. But you wouldn't know that the cost to borrow money is substantially higher based on what list prices are doing for condos.
Yeah, so condos are kind of a special duck. They're either an entry product for people trying to buy their first place, or they are an investment property for an investor, and those tend to be cash purchases. So you can have a tale of two payment options. So I think that's what makes condos more interesting that way.
Okay, and then here we have inventory. The only thing crashing in the housing market is inventory. If you go look back at this, now go back to 2019 and the beginning of 2020, that's a normal market, okay? And then you can see inventory dropped off, but you can see right now, inventory is still declining. It looks like a pretty strong trend. And if you look at last year, we reached the lowest low we've ever had, ever, for a number of condos in the market. I don't know if we're going to get back there, but it almost is unheard of that, given what people thought if you'd have told people a year ago that inventory would be, I think the number was 700 and something condos, and that would be it. They would say, no, that can't be right. It has to be 5,000, right? That's what they would have thought, because that's what they were told was going to happen. Inventory was going to massively build up.
Right, but that didn't happen. The market is just kind of not doing a whole lot. It's just very stable. Homes are appreciating. Homes are selling. There's not a whole lot of excitement.
Okay, let's talk about predictions.
Okay.
For the fall.
Okay.
We should instead of doing a technical analysis, we should do what the crash bros and the housing haters do.
Okay.
We should make shit up. So
well,
let's start with, first of all, we have purchased a highly technical device.
Yes.
Here.
So here is our fortune-telling ball.
It's getting brighter. It's changing colors now. It's telling us.
Oh, it died.
You just crashed the housing market.
I crashed the housing market. Oh, well. There we go.
Do you have the remote for it? Can you turn it back on or something?
I don't know if it turns back on. Maybe the battery's dead.
Why did you put it over there?
I don't know.
You have to put
I can't see.
Here. She's blind. She literally. Yeah, it doesn't work.
It's done.
Okay, want to just crash? Look. Want to just crash the housing market, sell everything you can as fast as possible. Okay? Housing's not going to do very well, apparently, in the fall.
So if you want to get us a more high-tech crystal ball, feel free.
Bring the crystal ball back here. I'm gonna do my Hamlet impersonation with a crystal ball. Okay? All right. So, staring into the crystal ball, what do I see?
You see the housing universe.
I see the housing universe. I can see all the houses.
And all the condos.
Now, the foreclosed homes, you can't see because there aren't any. So that's the first thing. Okay? The inventory, you can barely see because there's not much of it.
Okay.
Okay? And the interest rates you can kind of see because they're kind of high. But here's the thing. The Fed stopped raising rates. It's going to take a while for the economy to absorb that and for borrowing to get back to a normal level. It's pretty likely the economy is going to slow in the next few months. Mm-hmm. And when this happens, the Fed, if the Fed feels inflation's under control, they'll stop dropping the lending rates. Now, remember, that doesn't directly affect the 10-year. It takes a while. 10-year is what really affects mortgage rates. So what I predict is less inventory this fall than we had last fall. Meaning, whatever the number of homes for sale was in the U.S., in Vegas, anywhere, I predict less. So, Juana, based on that prediction, do you think that my prediction makes sense? Or do you think, here, you can hold the thing now. Tired of holding it.
You're holding it. I don't know. I think it all depends on interest rates. If interest rates go down, I think we might actually see a bump in inventory, and we might see some more transactions because some of those sellers out there that are kind of frozen in place might thaw out a little bit. So I
Okay.
think that that's a possibility.
But do you
But
think so, even with the rates being where they are?
no, not that's what I said. That if interest rates start to go down, I think some of those sellers will come to market.
At what point do you think, though, people just say they're fed up with it? They just say, they're never going to change, and because I don't think people are going to.
So I don't think that's the issue. I think the issue is the lack of inventory, Todd. So long as there's no inventory, then sellers can't change, can't swap houses.
Are we stuck in a catch-22?
That's basically where we are, and which is the reason why builders have decided that they're going to build. They're getting a little more optimistic in their outlook for housing, and they are pulling permits. They are starting to build, but it's going to take a long time. We've talked about this. It takes a long time from when they pull permits until it gets to the end user. It takes months and months, and sometimes depending on the house, it could take a year or longer. So that's something that we're going to have to watch and see.
Okay, one more thing I want to talk about, because I read an article that kind of got me going. So it was from like Fortune, and I know that doesn't mean anything, but the woman who wrote the article literally said that if the economy slowed, the foreclosures would immediately start and home prices would drop. So let's talk about that. What's the assumption of a person gets their hours cut? Do they immediately walk away from the house, or do they?
So no, look, we don't live in a vacuum. Even if somebody loses their job, there are other options, right? They have friends and family that maybe can help them out.
Okay.
Maybe they have savings. Maybe
Better have savings.
maybe they do. Maybe they work something out with the bank to postpone some payments or make some sort of arrangement. Look, the bank doesn't want to foreclose. It's not a profitable situation. It's bad optics. They don't want to do that. They will foreclose if they need to. It's not that a bank will not foreclose, but that's not their first go-to remedy. Their first go-to remedy is going to be to communicate with the borrower and see what's going on, and providing that borrower is not doing an ostrich thing where they're sticking their head in the sand and pretending it's not happening. Providing that borrower works with their lender, a lot of times they can work something out, at least for a few months. That gives the borrower time to find another job and get back on track with the loan.
The unemployment rate last month was 3.4%, and there's still like 9 million unfilled jobs.
Right.
So just like all those tech workers that lost jobs at Twitter and places like that, they've pretty much all been employed. They've all found jobs. Most of them.
People have found jobs. People have chosen to do other things. Maybe they've chosen to step out of the job market for personal reasons. Maybe take care of a family member or start a family or whatever.
Start a YouTube channel.
Maybe they've chosen to innovate, and they're sitting there creating some amazing thing that we're all going to be using in no time at all. So there are lots of options for people.
Crystal balls.
Crystal balls.
Crystal
That's
balls.
it.
It's not even crystal. I don't know. I think it's plastic or something.
It's a plastic ball.
Okay, so what's your outlook then for the next 6 months and then the next year?
Okay, so the next 6 months, it's going to be kind of like the first 6 months. It's going to be kind of a snooze. Not a whole lot going on. I think interest rates, the Fed might pop it another quarter point. You never know. But I think for the most part, the increases are kind of at an end. I don't see the interest rates really mellowing out substantially, certainly not over the summer. I think the Fed is going to take a wait-and-see attitude with inflation. I think mortgage rates are going to pretty much settle down. I think they're going to probably settle down somewhere around 6% once it's clear that the Fed has stopped raising interest rates. I think they're going to settle down around 6% and wait and see. The whole thing is that this year is just a pause from last year.
It's a rebuilding year.
It's a rebuilding year. It's not a year to have excitement. It's a year to just kind of rebuild and let everything kind of catch up. So that's why, I've been saying from the end of last year that this year was just going to be kind of a snooze, not a whole lot happening. Of course, if your market is different, we completely understand, because real estate, we talk about this all the time, is hyper local, right? And so, of course, there are markets that are still seeing a lot of multiple offers, and they're still seeing substantial price increases. And of course, there are markets that are seeing some pullback on values. But overall, when you're looking at the U.S. housing market, it's pretty much just very mellow, not doing a whole lot.
Okay. What gets me is when people generalize recession, everything gets bad. It's like people are driving 45 and then there's a recession and people drive backwards at 35. It doesn't work that way. Okay? Every single market doesn't have declines. Every single industry doesn't have declines. It's highly likely that hospitality, leisure, and travel will continue, which is just on fire right now, will continue to be on fire even with a aggregate lack of growth. There are some parts of the economy that may slow down, and then there may be some cities that and some regions of the country that have lower growth or have contracting growth. Not likely to be Las Vegas, not with what we have going on right now. Is that if you pulled Las Vegas out of the U.S., no one here would be talking about a recession or anything, or a slowing economy.
No.
We've actually only had, not counting COVID, we've only had one time where we had negative economic growth, and that was the 2008-9 when all the construction jobs left and everyone left. And it was kind of a rough year. But other than that, we've kind of been chugging along, adding people every year, growing the economy every year. And we're going to add 80,000 people in the next 12 months, whether we want to or not in Vegas. So I predict that we're in the same boat a year from now. We have very low inventory. Interest rates probably a little better than they are now, but not enough to get people to do the churn and sell. And the fall, we have a lower number of homes on the market than we did last year. You probably missed your chance to really kind of get a smoking deal on a house. I think that's in the past.
But there are always opportunities, so keep your eye out, because in any market there are opportunities.
Yep.
And it's not that I'm being Pollyanna about it; it's that it's the truth. There's always an opportunity to find a good deal that makes sense for you and makes sense for the other party.
And if one hadn't crashed the housing market with by mishandling the crystal ball, it's not even crystal.
So tell us what you think. What's going on in your market? What are you seeing? What do you think? What do you think is going to be happening with the housing market in the U.S. for the next 6 months? What do you see for next year? If you shake your crystal ball.
You don't shake it. It's not a snow globe.
Okay, well, if you plug it in then. If you plug in your crystal ball, what do you see? We want to hear from you. We like your comments. We try to respond to as many as we can, at least give you a thumbs up. And we appreciate you being on the channel. So with that, please subscribe, hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.